Hello, my fellow investors, and welcome back to another stock analysis video, and the last one for the earnings week for the day of April 25th. So we got, guys, the company 3M. Let's cover this one. Obviously, I just did a deep dive for this company, so if you guys want to see hour-long video, make sure to check it out because, yeah, I go over their 10Ks. It was a lot. So, yeah, so let's cover this company, see if the current share price is a good buy. This company has fallen a massive amount. The price that I bought it at, unfortunately, it was like 155. Now it's down to like 104. So, you know, it's another company I'm down on, but it's 3M, major company. They've spun off two of their sectors, believe it or not, and they're definitely consolidating to a more core kind of business. So let's get started with these earnings reports. So we got over here, guys. They did have earnings. I believe it was post-market. I forgot when it actually was. Yeah, no, it was actually pre-market. And EPS came in at $1.97, beat by 37 cents. That's good. We got EPS gap, $1.76, beat by 18 cents. Revenue, $8.03 billion, which is a beat by $517.33 million. Now, in regards to their actual earnings report, understand that we're probably, and Mike, by the way, you as well, understand that we're probably going to see a downturn on their revenue year over year because they have spun off two of their segments. So, you know, when you do that, you're going to lose revenue, right? Because you're taking in revenue from before that you no longer have right now. So it is what it is. But yeah, just FYI when it comes to that. Nonetheless, though, we got the CEO's comment. In the first quarter, we continued our relentless focus on serving customer and aggressively manage costs. Boy, do they need a lot of that, said the 3M chairman, Mike Roman. Market trends were as we expected, and we made changes to improve our operations and position us for success and supply chain improvements. I'm so sorry. To strengthen 3M for the future, today we announce actions that will reduce costs at the corporate center, further simplify and strengthen our supply chain structure, which again, major conglomerate, that's their main problem, is that they just have too much going on. You want to streamline. In fact, he even goes on to say, and streamline our go-to market business models, which will improve margins and cash flow. I love it. We will continue to prioritize investments in high growth end markets where 3M science gives us a clear competitive advantage. So you can tell that he's pretty much saying that, like, yeah, we have problems. We're fixing it, though. We're fixing it. So that's pretty good, in my personal opinion. Now, unfortunately, actually, we can just come right over here because the next thing that I have here is their table. So this is similar to what happened with Verizon. I didn't pull up the table. But nonetheless, though, we got over here sales. $8 billion, down 9% year over year, with organic sales declining 5% year over year, a 1.3% headwind from divestitures, and 2.8% headwinds from foreign currency translations due to the strength of the US dollar. So again, when it comes to sales, understand that they did just spin off like two. They had four segments. They spun off two, so they're down to half. Not surprising that they're down by 9% year over year. So it is what it is. Adjusted sales of $7.7 billion, down 9% year over year, and adjusted organic sales of 5.6% year over year, which included a 3.4% point headwind from the decline in disposable respirator demand, along with the 2022 exit of Russia. So that also has to play with it because they were all over the place, and then they no longer have business in Russia because of the Ukraine war. So that's another thing that they're just losing money in. Operating cash flow was $1.3 billion. Up 26% year over year. Well, adjusted free cash flow was $0.9 billion, up 24% year over year. That's surprising. 3M returned, look at this, $856 million to their shareholders. Now, this was probably I like how they don't mention, I really like how they don't mention either through buybacks or dividends. Probably a bit of both. Nonetheless, though, they don't mention it. But they have returned almost $1 billion back to the investor. Now, looking at these comparisons, though, we can see that the net sales in 2022 was almost $8.83 billion, and it was down to $8 billion. Okay, operating income, we got 1.64 to 1.24. Okay, we got, let's see what else we got. Net income attributable to 3M, 1.3 billion to 976 million. That's rather concerning. And if we could try and get the free cash flow, I wonder if I could get the free cash flow on here. We got the cash and equivalents. We got the cash flows from financing activities. Don't really see the free cash flow overall. Yeah, maybe I'm just missing it, or maybe I'm just tired. But nonetheless, though, I mean, we did just see that the free cash flow up here, operating free cash flow up 26% year over year, and $0.9 billion, 24% year over year. So, again, these are the earnings report. This will be linked in the description below for everybody to see. So let's come now into the discounted free cash flow. We got the ticker for MMM, market cap of $57.5 billion, a PE of 10.25 with a current share price of $104.37. Now, looking at this graph, guys, well, this is rather interesting because intraday they fell 0.66, but aftermarket they rose 0.4, still down overall though. 1 year down almost 30%, year to date down almost 15%. I said I bought this company at around 155. Take a look at this 52-week range, $154.66. So I pretty much bought this thing at all-time highs. Back then, I had no concept of shares outstanding or anything like that. So, you know, I'm going to give myself that as an excuse. But you can see that the low is at $100. So they have not broken the $100, but we are very, very close to that 52-week low. Might serve itself as a really, really good opportunity to buy this company. So they do pay out a dividend of $6, which is actually kind of huge. This is an annual dividends, guys. A yield of 5.71%, a payout ratio of 59.01%, 5-year CAGR of 4.1% with 64 consecutive years, making them a dividend king. So really, really good to see right then and there. Those are rare. I think there's only like a handful of dividend kings. Ex-dividend date passed as of February 16th. Payout date was on March 12th, and they pay their dividends quarterly. Next ex-dividend date will probably be May 16th or something along those lines. So now with this $6 in annual dividends per share and the current shares outstanding, they pay out almost $3.3 billion in dividends every single year. And after this is paid, in their 5-year average free cash flow, they still have left $2 billion. And as of their last year's free cash flow, it is $546.8 billion. Million dollars, not billion, $1 million. So that's bad. They're pretty much putting in all of their cash flows going into this dividend as of their last year's free cash flow. In fact, these payout ratios are 85.77% for the last year payout ratio and free cash flow. And the 5-year average payout ratio, it is 62.08. So this one's passing my line of 60%, and this one is just barely above it. So very interesting to say the least. Now, coming into their fundamentals, we got the net income 5 years ago of $5.35 billion to 1 year ago of $5.77 billion, increase of 8%. What would you give this as a grade?
About a 80%, just because you have some outliers, but it's increasing.
Well, I mean, to be fair, this outlier right here was probably because of the spinoff. They had a lot of spinoffs.
Fair enough.
So
fair enough.
80%.
90?
No, I would give it an 80% because you can't excuse a spinoff. You really can't. On top of that, they have a ton of lawsuits as well. So I'll get now at the free cash flow. This one's interesting because this is just that one's just bad. We got 5 years ago of $4.86 billion to 1 year ago of $3.8 billion, increase of 21% with an average of $5.31 billion. Grade? You can see when they did the most, ironically enough, when COVID hit because of all the masks. So, remember? So, there you go.
Oh, yeah.
Yeah.
So, about a 60.
About a 60? Yeah. Actually, I would be a lot lower than that because look at this. The 1 year ago value is lower than their 5-year average. But then again, they've also had a lot of spin-offs. So, I'm going to go with a 55, honestly. Yeah?
Yeah.
Yeah. All right. We got the revenue 5 years ago of $32.76 billion to 1 year ago of $34.23 billion, increase of a little bit less than 4.5%. Pretty flat, honestly.
Yep.
So, grade?
About 80, because you are trending up and you don't really have any big outliers.
But look at this. Even 3 years ago during COVID, their revenue was still really low. Explain that. That doesn't make sense, does it?
Well, remember during COVID, they ship a lot.
They do.
So shipping expenses went through the roof.
I guess you're right on that one. All right. What did you say again?
I said 80%.
Okay. Sure. We could do 80%. Looking now at the assets minus liabilities, we got pretty consistent increase. A little dip here from 2 to 1 year ago, but aside from that, not looking too bad. Average total assets, it is 46.4 billion. Average liabilities, it is almost 33 billion. Doing this difference, we get $13.5 billion. Grade?
Yeah, about 80 again.
80?
Mm-hmm.
All right. All right. Looking now at the cash flow minus the liabilities, pretty consistently decreasing. Well, actually, sorry, no, it actually isn't pretty consistently decreasing. You can see that from 2 years ago, increasing, yet they fell as of 1 year ago. But they're still, well, actually, I was about to say they're still higher. They're not. The average it is negative 26.54, but they're still trending upwards at least from 4 years ago. So once we get this year, if they're a little bit higher, then it'll be uptrending. So what do you think?
About 50.
50. All right. Shares outstanding. We got 5 years ago of 576.6 million shares to today of 549.2 million shares. Decrease of 4.75%. From the previous year to the current year, almost 4%. Now, you can see a slight, and what I mean by slight, I really do mean slight increase from 4 to 3 years ago, but COVID related. You could pretty much just say that. 575 million to 577? What do you think?
I'm going to say 95.
95? Yeah, I would agree with that. And again, the more shares that they buy back, the payout ratio is going to go down because that's dividends that they no longer have to pay out. So that's good overall. And lastly, cash and equivalents, they currently hold 3.65 billion with an average of $3.62 billion. This overall grade, guys, come in at net income 80%, free cash flow 55%, revenue 80%, assets minus liabilities 80%, cash flow minus liabilities 50%, shares outstanding of 95%, overall grade of 73. Yeah, I kind of see it. It is kind of just like halfway there. It's like barely passing in my personal opinion. Now, they do have a lot of lawsuits ongoing. In fact, Mike, something that you may want to know. It's funny because they spun off a couple of their segments. And those segments, one of them I believe was the healthcare segment, which involved a lawsuit in regards to the hearing aid. And they spun it off, they sold it, yet they're keeping the lawsuit. So they're actually eating the cost of the lawsuit even though they've sold off that segment. So that's interesting.
You can't transfer the liability, but you can transfer the assets.
You can't transfer that liability, that specific liability. So it's interesting to say the least. So yeah, now let's figure out if at the current share price of $104 is looking like a buy, because yeah, I bought this thing, guys, at super high levels. So fortunate for me, I'm down on it a lot, but they're still paying a pretty big dividend. And actually, I recently made a few purchases on 3M. I got it to I got it to a quarterly dividend of $100, just because I'm like, I don't think that this company is gonna go lower. I don't think this company is gonna have any more, well, not they're gonna have any more problems, but I don't think they're going to go to zero. It's 3M, for God's sakes. So, all right, we got the revenue assumptions, growth assumption. Look at this, Seeking Alpha, negative 2.5. Yes, so negative 2.3, and we got the sales year over year. I don't know if you could do that percent in your head, but yeah, let's see if
barely anything.
Do it over.
It's a flat.
It's a flat. Actually, no, we got this over here, 9%.
Okay.
9% down and 4.9% year over year. So, yeah. What do you got? Remember, they're going down.
So -6.
Well, here's the thing with that. This is already at $50.
I know.
So any number that I put here, okay. -6. Oh boy.
And then, oh, I'm sorry. Well, we're going, yeah, -6, 3, and 0.
Positive
-3.
3. Okay, -3.
-3, 0.
Okay. And share buyback.
They were doing what, 5% on average?
I believe so. Yes.
So
and very consistent, by the way, as well.
Yeah. So at minimum 5%.
At minimum 5.
5, 7, 10.
5, 7, 10?
Yeah.
You mean 5, 7, 9? I guess not. All right, guys, and well, unfortunately, I really do hope you're wrong with this. I really do hope you're wrong with this. This is $41.67 to $54.69. Adjusting for debt, this comes down. They have a ton of debt. $23.83 to $36. Margin of safety of 5, 10, and 15. $20.25 to $34.11. I really do hope that you're wrong with this, because when I did this, I put them in the positive revenue. I really did, because even though you're going to get negative revenue right now, is because, again, you're comparing it to a year where you had other segments in the business. You get me?
True, but
So,
also
that's kind of where
you're
I'm at.
you're also you're pricing in something that hasn't necessarily occurred. I rather
It
price
has
in.
occurred. It has occurred. They already spun off everything.
They spun it off, but you don't know what the revenue is going to be now because of
Right.
that. So
Right.
now, if the next quarter comes in and it's better, then you can change in my opinion, you change the assumptions. But it's better to have like maybe like because you can do the outlook one way and then you can do the outlook the next and kind of find a middle ground in it.
Yep.
So
Fully agree.
that's one way to do it.
And also, we do have a couple of quarters already, if not a couple. I think we have 1 year with one of their segments gone and a couple quarters with both of their segments gone. So, but we don't have a lot of them together. So, yeah, it is what it is. But, yep. So this is pretty much it, guys. Like always, not financial advice. Please read the earnings report. Link is in the description below. Have all the calculators and make your own assumptions, because if you think that they're not going to do 0 and you think that they're going to do something along the lines like 5% with 10% share buyback, well, this is now $65.22. So, yeah, I mean, every investment is the present value of all future cash flow. So do with that information as you will. And with that, let's come now into, if you were to put in $5,725, guys, this would net you $329 in annual dividends. Really, really good. But again, payout ratio is very bad. They may cut it. That may be a problem in the future. So be very, very wary when it comes to this dividend. All right. So we're going to move now over to Mike for his technical analysis expertise.
You're not gonna. You might want to put earplugs in when I tell you about this, but there's some
the
good news for
earplugs.
you.
Well, you see, they have problems with their earplugs already, so that's a lawsuit of them. So not funny. Not funny.
Oh boy, yeah, hearing protection is nothing to laugh at. But so I'm gonna give you the bad news. I'm gonna give you the good news then. Bad news is I do think this company is going lower from its current share price of $104. Good news is you may be nearing a bottom near your relative lows going back to the 2007 and 2011 tops. So right here is basically a previous price point that sits at the $95 region, combined with something I'm seeing on the chart. Now, for all those that don't do technical analysis, you may not recognize this, but when you have price basically going down, and I'm going to make this as evident as I can. So from this low right here of the MACD, your MACD is trending up, and your price from the same exact point is trending downwards. This is also a divergence, but is a bullish divergence because you're making lower lows on the MACD and lower lows on the company. Sorry, you're making higher lows on the MACD, lower lows on the company. Something's basically telling you inverse. So price and volume are telling you one thing versus the actual price is telling you another. And with that, there is a bullish sign on the chart, especially this is a monthly graph. This is a monthly graph, which it does take time to play out. I do think with the doji candle in the month, and you only have a couple days to close of the month, you haven't made a monthly low or low. What I'm saying is it's an inside bar. The previous month's low was $100.16, and you are above that. Now, if 3M closes below that, I do see more downside potential. However, if you consolidate for the next couple months, you in this range, let's say between 112 and the 100, that would be very, very bullish because you're going to establish a point on top of the MACD may cross that, with the divergence, you can form basically a cross here, come down lower, and then form that secondary bottom. And I would be looking at the $95 as possibly an interesting target, just because it's your previous two highs going back to the 2007 high and the 2011. That's where I'd be looking at a very, very interesting point, and the exact point for everyone is $98.21. That's like the target I'd be hitting. On top of, if I hypothetically hit that, you'd be sitting very close to this reversal zone on the weekly along with price target zone, and the RSI and MACD would basically be continuing in that divergence. You can see here, price is going down, our MACD is trending upward. So there is a hidden bullishness in the chart, and now, that's not to say you can't go a little bit lower. When I say a little bit, I'm talking maybe spiking the lows, maybe another 5% down, and then possibly, but this region definitely be an area that I'd be looking to accumulate because of this divergence. Now, that's not to go blindly in. If you take out these lows of $100, then I'd be looking for that $95, $98 price target, or even worst case scenario, the 92. However, I don't think 3M can continue the bleeding the way it has been doing. Because of that divergence, you basically have to have a very strong catalyst to basically flush the lows. And when I say flush the lows, you're coming back down to $71. I really don't think you're going to get a revisit of the 2011, 2012 lows, especially you'd be plowing through this reversal zone, which on a monthly basis is not something that's most likely going to happen. On the daily, the lowest in my opinion is 96.87 or really the $90, but usually in the middle of the zone, right at 93, 94, 95, where we just talked about, is definitely an area that I'd be looking for. And also you have price action zone on the daily with a gap fill here at the 103 to about the 102. So definitely in the bottom of this zone at 101, 102, that's where I'd be looking to pick 3M up, possibly just because you had earnings. It didn't have the most craziest reaction to earnings, but I do think you're going to maybe spike that low, possibly take this out here to either accumulate at the 101 or come down to the 96. But really that $95, $96 area is going to be an important area to bounce. Also psychological, going back to the 2011 highs, that should be very, very strong support because that was resistance. Now on a monthly basis, now that is support, but it has to be a support on a closing basis on the month. So if you get a quick spike there, bounce off, then I really be looking for more upside potential in the company. Now, if you close below that, then I'd be looking for that $70 flush. However, seeing the divergences that are playing out on these larger time frames, remember the weekly time frame is very long. It's every candle is a week. The monthly, this is where all the noise gets taken out. Wherein I see the monthly, I see the weekly building into the monthly, and then also the daily building into there. Where the daily, you can see here price is going down, MACD is making the higher lows on top of your low. Your low was created on a higher MACD bottom than the previous one here, so this definitely could be a possible bottom here. So definitely bullish in my opinion, and I do think the company has some things it has to get worked through. As you can see on the daily chart, it has resistances sitting at the 110, 120, 130. Pretty simple by the tens. It's kind of a interesting thing how the company trades, but each of those areas, there's going to be price action. So there could be an area of possible accumulation. And once you start showing the consolidation at the bottom, similarly how you may be forming here, because you are consolidating sideways, you stopped going down. The one thing that gives me hesitance on 3M is this downtrend. So this downtrend basically is 3M's been since almost the January of 2021. And until you break this downtrend, I wouldn't necessarily be looking to accumulate in the company. And the first thing I would say is get above the 50 daily moving average. If you get above 105.91, close above it, then close one candle above that, then I'd be looking to tackle this downtrend here. And that's when I would start accumulating. Until that happens, or you come down to some of those targets, then I would basically just sit on my hands and wait for better price appreciation or the chart to basically tell you when it's time. Personally, the first thing I will look at is either spiking the lows or the 50 daily moving average break. And if not, then I would see other price structure in the company and maybe change my mind of when it's time to get in. But as of now, it is a sit and wait on your hands for that opportunity. Like Warren Buffett says, the stock market is the transfer of wealth from the patient to it is the transfer of wealth from the impatient to the patient, and boy, are we tired of mixing words up like that. And
absolutely. So yeah, I think that that pretty much does it for 3M when it comes to your stock analysis. I kind of took away your screen there at the very end, but it's whatever. It was at the very end. Anyways, guys, for the video, that pretty much does it. If you like, comment, subscribe. It really does help with the algorithm on YouTube. You guys can follow us on the new tech sites. Link is in the description below. So with that said, peace out, and we'll see you all tomorrow.